Good morning, everyone, and thank you for joining us today. We appreciate you taking time out of your busy schedules to be with us this morning. My name is Munzer Ghosheh. I'll be your presenter for this edition of our monthly educational webinar titled 5 Partnering Strategies for Your Real Estate IRA. Our national webinars usually are extremely popular, and this is no different, judging by the number of attendees that we currently have signed on. So I anticipate that you'll have a few questions for me, so please don't hesitate to ask. As Caroline mentioned earlier, just simply please type in your questions at the bottom left-hand corner there of your screen, and I'll try to get to all of your questions at the end of my presentation at the Q&A session, time permitting. So before we get started, I'd like to go ahead and read out a disclaimer for you that the Entrust Group, Entrust, does not provide investment advice or endorse any products. All of the information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investments. So a little bit about the Entrust Group for those of you who are not familiar with us, with who we are and what our role is, what the role we play. And for the ones that are, thanks for your patience. So just give me a couple minutes to walk people. Let them know, what the Entrust Group does. The Entrust Group is a premier provider of self-directed retirement plans. We work with individuals and small business owners who wish to invest in alternative, non-traditional assets inside their IRAs or 401k plans. What makes us unique is, we don't sell any products or give any sort of advice, whether it's legal, investment, or tax advice. We merely purchase the asset on behalf of the client's retirement plan and do the annual record keeping and reporting for them to the IRS. We're just administrators. We're order takers, if you will. We've been in the business for almost 35 years and manage over $2 billion of investor assets. But what really differentiates us from our competitors out there in the industry is we differentiate ourselves in two distinctive ways. One, we're the leaders in education in our industry through our national continuing education program that we have out there for whether it's for professionals such as realtors, financial planners, attorneys, and so forth, and also through the national and local in-person events that we hold nationwide, and we also obviously the national webinars, the monthly national webinars that we currently have that are very popular with our clients. We're also the only ones in our industry with local offices. This provides, we believe, our clients with the exceptional customer service and faster transaction times, which are both extremely crucial in our industry. So a little bit about a brief background on real estate IRAs. How many of you out there probably have heard the term self-directed IRAs or SDIRAs? It's really a term used in the industry for a retirement account that allows you, the IRA holder, to invest in non-traditional investments such as real estate and others. It's not a type of IRA. It's just a term for a retirement account in which you are in charge and control of making all of your investment decisions. So the same applies to the term real estate IRA. So simply it's just an IRA that allows you to invest in real estate. Again, not a type of IRA. So when one is completing your typical IRA application under type of IRA, you're not going to find self-directed IRA checkbooks, check the box, or real estate IRA. The types of IRAs one would establish is your typical personal IRAs that you are familiar with, such as traditional IRAs, Roth IRAs, or the business IRAs, the employer-sponsored IRAs, such as SEP, Simple, and others. And if those IRA accounts are established at a self-directed IRA administrator such as the Entrust Group, then that would enable you to invest in real estate. So again, standard rules, will apply therefore to this IRA termed real estate IRA, such as distributions, contribution deadlines, and etc. And by the way, speaking of contribution deadlines, if you have not made your contribution yet for the 2015, remember tax deadline is coming up. Actually, this year is April 18th. You have up until Monday. Whether you have an IRA already set up, make your contributions if you haven't. Whether you do not have one set up, please give us a call. We're happy to set one up for you. If it's a traditional or Roth IRA, or if you're self-employed, you can set yourself up with a SEP IRA. Again, you have up until Monday, April 18th, to do so. So what can I invest in my self-directed IRA? So what do individuals with a self-directed IRA at Entrust invest in? By using Entrust as your administrator, our clients get much greater flexibility in the number of investment choices they have. With the exception of a number of asset classes out there such as collectibles, antiques, S corporations, and life insurance products, you may invest in almost anything. Our clients invest in, obviously, we'll be talking about real estate today, but in LLCs, limited partnerships, precious metals, secured, unsecured notes, and the list goes on and on. But today we'll be talking more about real estate. So here are some examples of what real estate investments allowed in a self-directed IRA. So, we have clients investing in apartment buildings, co-ops, condominiums, single-family, multi-unit homes, commercial properties. So those are larger deals. This is what primarily we'll be discussing today, how you can partner your IRA with others to maybe go into those larger deals. Improved or unimproved land. A lot of our clients just purchase raw land, just hold it in their IRA for appreciation, very popular. Investing in limited liability corporations that those LLCs would turn around and purchase real estate. Offshore real estate, a lot of our clients invest in international properties. Again, anything, almost anything. But the rules apply basically that it has to be for investment only. So when you're purchasing a piece of property, real estate in your IRA, no self-dealing, it's an arm's length transaction. Basically, if you're buying from a third party, renting out to a third party, and then eventually selling to a property to a third party, you have no issues. I just want to make sure that you're aware of that. So partnering your IRA, this is what we're going to be primarily talking about today, and I anticipate you'll probably have a lot of questions for me. And really one of the main questions or concerns our clients have is, and they call us, is, I have an IRA, I don't have enough funds in it, I'm interested in investing in real estate, but I don't have enough to invest in real estate. I think it's a great concept. My retirement funds are not large enough to purchase real estate, especially if it's a large deal, such as a fourplex, office buildings, commercial properties, etc. We get all these questions all the time, and the answer simply is you don't need a lot of funds to invest in real estate with your self-directed IRA. You can partner it, and this is some of the things that we'll be talking about today. So if you're familiar with self-directed IRAs, you're probably familiar with disqualified persons, or in other words, persons that my IRA cannot do business with, namely direct family members, spouse, parents, grandparents, children, grandchildren, and in-laws. But those rules limiting the people who can do business with your self-directed IRA do not apply to partnering as long as, and that's very important, as long as it's a new investment, meaning the self-directed IRA can partner with anyone, including those disqualified persons we talked about, such as parents, children, etc., and spouse, at the time of the initial purchase. But after the transaction is closed, the IRA cannot conduct any business with disqualified persons. So let me give you an example, for instance. Let's say a client uses their IRA to purchase a piece of raw land, like we said, and they close escrow. Now the IRA holds the property. 5 years down the road, they decided to build on this property. Now, the IRA holder becomes disqualified because the transaction has been closed. Spouse, parents, grandparents, and all of these disqualified persons. So they may not partner with them to go ahead and, let's say, build on this property, on this piece of land. So again, there's no limits to how many different people your IRA can partner with as long as it's at the inception. So you can go in all together. And again, as long as you're buying from a third party, non-disqualified party. And speaking of disqualified persons, and again, this is something that anyone that is going to be, doing a self-directed IRA, I encourage you to be familiar with who is disqualified. Speak according to the Internal Revenue Code 4975. Here's some examples of who are considered disqualified persons. Obviously, it's your IRA. You, the IRA holder, and your spouse. Any lineal ascendants and descendants and their spouses. So we're talking parents, grandparents, children, grandchildren, and their spouses are considered disqualified. Any entity, a business, corporation, partnership, of which you, the IRA holder, own at least 50% directly, which is you, indirectly through other disqualified persons. Those entities are considered disqualified. Again, this is extremely important because the critical aspect in determining whether a transaction is prohibited is understanding who is considered a disqualified person. And you need to be aware of that and make sure that you're not dealing with those disqualified persons in any way, shape, or form, because that constitutes prohibited transactions to your IRA. So let us take a look at some partnering strategies for your real estate IRA. And this is really pretty much why everyone here is on this webinar today, to understand more about how you can use your IRA to partner with others to possibly purchase real estate. So let's take a look at the partnering strategy number one. Here, combine your IRA with other people's IRA funds. Okay, so a scenario could be here where you and your coworkers, for instance, or friends, family, are looking to purchase a commercial property, larger deal, and all parties involved want to use their IRAs to execute the transaction. So in this case, each IRA owns a percentage of the commercial property as undivided interest joint tenants. So your self-directed IRA owns a percentage of the property proportionate to the percentage of funds you contributed. So let's say, for example, this property is worth $100 million and your IRA came in with $200,000. So the IRA obviously owns 20% of that. So your self-directed IRA is responsible for a portion of all the property expenses equal to the percentage of ownership, in this case 20%. So 20% of all the expenses associated with that property tax, insurance, anything, your IRA is responsible for 20% of that. The same portion of all income related to the property goes into your self-directed IRAs, tax-free and tax-deferred, depending on what type of IRA you have. So 20% of all the income generated by this property, using this example, will go back into your IRA. Now, once the property is sold, your self-directed IRA receives a portion of the proceeds matching the proportion of the original investment. Again, going back to the 20% example, you sold this property, you bought it for $1 million, you sold it for $1.6 million, $600,000 profit. 20% of that, $150,000 minus any of the expenses, obviously, closing costs or what have you, will go back into your IRA tax-free or tax-deferred. Okay? So, partnering strategy number two, combine your IRA with other people's non-IRA money. So again, the first strategy, the scenario was all parties involved came in with IRA funds, which is good. In this case, your IRA could partner or wants to partner with non-IRA money, such as, for example, partner with another investor, someone you don't even know. Investors are always on the lookout for new opportunities. And if you network with like-minded individuals, it could be a great way for you to find an investment partner. Partnering with a fellow investor could possibly offer you the potential to learn from each other, as well as to disperse the risk between two people. Another one would be partner with a relative. Again, very popular strategy, as we already discussed. And as we already mentioned, why you're not allowed to buy from or sell to relatives, meaning direct family members, you do have the option of partnering with them to purchase a new investment from a third party. So again, we see that quite often in transactions with a husband, and wife, father, son, family members, etc. Thirdly, you can partner with your own non-IRA money. I mean, again, this is also very important to think of it, and just always think of you and your IRA as separate entities. So it's possible to partner your self-directed IRA with personal savings for the purchase of a real estate property. Again, undivided interest. It's you and your IRA. Think of it as two separate entities going into the deal, whatever the percentages are, 50-50, 60-40. Remember, again, think of your IRA and yourself as completely separate entities. Partnering strategy number 3. Now, we talked about the IRA partnering with other IRAs. We talked about IRA partnering with non-IRA funds. Now we can partner with multiple IRAs and multiple personal funds. Sometimes partnering within one account or one investor or only yourself will not provide you enough funding for the investment you're interested in. Maybe a much larger deal. So now in this case, you can go in and partner with a group. And this scenario would apply, for example, to family members. Again, very popular. Or family and friends, husband, wife, brother, parents, etc. All are looking to purchase a larger commercial deal. So they all decide to go in with possibly their IRAs, personal funds. Again, a popular strategy, and they're all under undivided interest. And each one will be responsible for the certain expenses proportionate to the amount that they own, and income goes back to their IRA, again, proportionate to the amount that they own. Another partnering strategy that we see is you can own leveraged property in your self-directed IRA. Now, again, here your IRA is not really partnering, if you will, with any other IRA or person. However, the IRA as a separate entity than yourself, again, remember the IRA as a separate entity, is being leveraged in order for it to be able to purchase the real estate property, since there's not enough, let's say, funds to purchase it fully in cash. Now, so in this case, the IRA puts the down payment, but the IRA as a separate entity will have to apply for a loan, and what we call a non-recourse loan. And there are obviously certain stipulations, however, when there is leveraged property. And one is the loan must be non-recourse, meaning that the lender really, in essence, has no recourse on anything but the property. So in case of a deficiency balance, the lender cannot go after the IRA holder. So the lender also cannot use the IRA holder's income, credit, or employment to facilitate the loan. It's just a loan to the IRA. And the IRA is the actual borrower on the loan and the vested owner on the property. What that triggers, triggers a debt financing transaction, will subject the IRA to what we call an unrelated debt finance income based on the percentage of the debt. This is something that we discuss in greater details in other webinars, obviously, but just want you to be aware that that is subject to the debt financing transaction will subject the IRA to this UDFI based on the percentage of debt. So, for example, if the IRA earned, let's say, $10,000 in annual income, just for example, on a 50% leveraged property, then $5,000 will be subject to that UDFI. Again, but basically the IRA is paying taxes on borrowed money. And lastly, the last partnering strategy that we can talk about, again, very briefly here, is an IRA can own interest in limited liability companies, LLCs, or beneficiaries of land trusts. Investing in real estate with an entity such as an LLC is an extremely popular strategy for investors. There's so much to know concerning the strategy that we will get to this in our next webinar. We devote a whole webinar to this particular partnering strategy. But essentially, the strategy involves setting up an LLC where the IRA is one of the members or could be 100% sole member. So the LLC then, as a distinct legal entity, will purchase the real estate property or properties. So everything will be titled in the name of the LLC rather than the IRA itself. So let's quickly take an example here where your IRA partners with multiple IRAs and multiple personal funds, other family members. That might be a good idea there. Rather than to go undivided interest on the deed, structure an LLC with the members being the different IRAs, including yourselves, and personal individuals. Now the LLC as an entity, again, buys, sells the properties in the name of the LLC and distributes the incomes accordingly to the IRAs and other personal funds. Again, there's so much to know about this and cover in this strategy that we prefer to devote it to a separate webinar all by itself. So let's take a look at a case study here of two individuals, John and Laura. They're looking to purchase partner to purchase a single-family home, and they both want to use their IRAs. So again, John is a 26-year-old professional. Laura, his friend, has experience investing in real estate with her IRA, and she agrees to partner with him. So they're buying a property for $200,000. John is coming in with 10% interest, so he's investing $20,000. As you can see, he has $30,000 in his IRA, so it's a good idea to keep some reserves in there because, again, keep in mind all the expenses to be paid by this IRA has to come from his by this real estate has to come from his IRA. Laura's coming in with $180,000. She has $230,000 in her Entrust IRA account. She's coming in with $180,000, and she holds 90% interest. So they purchased this property. Again, this property, and they're renting it out to non-disqualified persons, people, and it's earning $20,000 annually in terms of rental income. The cost to maintain this property is $4,000, including property taxes, insurance, and what have you. So obviously everything is going in and out through their Entrust group IRAs. So all the income generated by this property, they're instructing the tenants to write the checks to the Entrust group for the benefit of their IRAs. Goes back into their IRAs. Any expenses, they complete what we call a payment authorization letter form instructing us along with the invoice to pay their payments. So in this case, John's IRA, owning 10% of this, is receiving $2,000 of the $20,000 for rental income and paying $400, which is 10% of the annual expenses. Laura, on the other hand, is receiving $18,000 for 90% interest and paying $3,600 of expenses. So down the road, they hold this property for 3 years, and during those 3 years, John's IRA has received a total of $6,000, $2,000 annually, times 3 of $6,000 of rental income, and has paid $1,200 in expenses for a net profit of $4,800. Obviously, all that is tax deferred or tax free, depending on what type of IRA John has. And Laura's is also, she received $54,000 and paid $10,000 for a net profit of $43,200. So at the end of 3 years, they decided they got a good sell on the property. They decided to go ahead and sell it. So the IRAs are going to go into the transactions and sell the property. They're selling it for $275,000, closing cost of $25,000. That leaves them with $250,000 that they're going to divide proportionate to the amount of interest percentage. So John's IRA owns 10%, therefore he gets $25,000, and Laura's IRA owns 90%, therefore gets $225,000. So in looking at this, John's IRA had earned a total of $9,800 off of his initial investment. So both IRAs receive a return on the investment. And the beauty of this, doing it inside their IRA, is what? There are no capital gains, right? So everything goes back into the IRA, tax deferred or tax free, depending on what type of IRA they have. At the time of distribution, they may be paying taxes if it's traditional, or they will not if it's a qualified distribution out of a Roth IRA. So that, in essence, how it's done. Partnering with, in this case, with two IRAs. So let us go ahead and kind of walk you through a summary of what we did today. I see there's a lot of questions here that we're going to get to. And again, time permitting, but we have plenty of time, so we'll try to get to all these questions for you. Again, feel free to ask. There's no such thing as a bad question. Just feel free to ask any questions that you may have, and we'll address those in the Q&A session coming up very shortly. So in summary, a self-directed IRA can partner with anyone, right, at the time of the initial purchase. Again, no one is disqualified, including the family members that we talked about, and including yourself for that matter. Yourself, your spouse, parents, grandparents, children, grandchildren, in-laws, anyone is okay as long as you do it at the inception. You go in together to make the purchase. Those disqualified persons become disqualified when the transaction is closed. There are different strategies you can use to partner your small IRA to invest in real estate. Obviously we talked about some of the strategies. Partner with other IRA funds. Possibly, partner with your wife's IRA, your brother's, your father's, anyone for that matter. Partner with non-IRA funds, whether you want to partner with an investor, whether you want to partner with family members, whether you want to partner with your own personal money, and then a combination. So again, where there are multiple IRAs and non-IRA funds going in to purchase a much, much larger deal. We talked very briefly about leverage and how that could help you obtain this larger deal because you have a small IRA and you're not able to do so. By leveraging the IRA, obviously it's subject to UDFI tax and so on, you're able to get that property that you couldn't otherwise. And you can, lastly, the last partnering strategy is set up that LLC and have multiple members, including your IRA, your spouse's IRA, non-IRA funds, any of those. You can have as many members you want, and then the LLC as a distinct entity by itself will go out there and purchase the property and it's titled in the name of the LLC. So again, your self-directed IRA owns a percentage of the property proportionate to the percentage of funds you contributed. All expenses are paid from the IRA, and then all incomes go back to the IRA proportionate to the amount that you own. All right, so how to open a self-directed IRA. Real quick here, and then we get to your questions, I promise. So there's really three easy steps, and they are that easy. We open up an Entrust account, complete a couple of our forms, send it over to us. In a matter of 24 hours, your account is open, established, and ready to go. Fund your account. There's two ways you can fund your account. Well, actually, there's three ways. You can do your IRA contributions that we talked about, that you have the deadline till April 18th. I strongly recommend each and every one of you to set one up if you haven't yet. You have till Monday, the 18th, to do so. Or you can transfer from an existing IRA that you have at a traditional brokerage firm that in all likelihood would not allow you to invest in real estate. Therefore, you need a self-directed IRA. We can do the transfer for you, very simple. Or you can roll over from a previous 401k plan, those retirement funds that are sitting dormant there, use them in a self-directed IRA to invest in what you know and understand. Now, we are running this transfer promo and rollover promo that is up until this Monday, that if you set up an account with us by Monday the 18th and submit with it a transfer form from another custodian or administrator or a rollover from your previous employer, we will waive the $50 setup fee for you. So please go ahead and take advantage of that if you like. There is a deadline coming up, which is in a couple days on Monday the 18th. And then thirdly, once the account is open and funded, now you are ready to go out there, identify, purchase your asset. Remember, we don't sell any products. We don't give any advice. We're just merely your administrators. So you go out there, identify the property you want to purchase. You will contact us. You will complete our bi-direction letter for real estate, and we'll get the purchase contract in the name of the IRA. We sign that for you. We pay the earnest deposit for you. Open escrow in the name of the IRA. We coordinate with your escrow officer and title company. We fund escrow. We close escrow, and now the IRA owns the property. It's that simple. So again, let us get to some of these questions here for you. And while we're doing that, I'm going to put my information for you here. I see a lot of participants. If some of you are in the Southern California area, please take advantage of both my local offices that I have. My main office is up in Santa Monica in the LA area. I also have an office in Orange County in Mission Viejo. Feel free to call me at the number listed up there, 310-496-4216, or email me at mghosheh at the Entrust Group. More than happy to meet with you in person and discuss any of your self-directed needs for you.